Hi, it's now 5:30 p.m. Japan time on April 18, 2025. Today, the Nikkei Ninigo closed at 34,730 yen, up 1% from the previous day. The market momentum is clearly recovering, and I feel it could go even higher soon. However, the volatility index is still above 13, currently at 31.42, so the market still feels a bit cautious. It's not a calm market yet, but the rise is steady, which is a good sign. The PER ratio is not out yet, but I think it's probably back in the 14 range, which could also be a positive signal. Today, most global markets are closed, so Japan is in focus. Let's see how much Nikkei futures can rise during the quiet period. Gold might move in the evening session, but Nikkei is likely to be a main focus for today. Since as countries are on holiday, Japan might keep going up during this time. Looking at individual stocks, we can clearly see a sector rotation happening. Domestic demand stock like retailers and media are doing very well. Not only growth markets, but also names like um, Daiso Industries and Power Group performing nicely. This reminds me of the market mood around 25. Back then, domestic stock also gained a lot of attention. So this rotation from exported related to domestic related to stocks is something we should watch closely. There are concerns about trade tariffs, and the yen is getting stronger. TV companies and other domestic sector are also seeing buying interest. And that said, I think we should be cautious about this rotation. Historically, when exported related stocks start to slow down, money shifts into domestic stock. This inflow can be very strong and quick, which creates short-term rise. But if domestic stock also start to struggle after that, there's nowhere left for the money to go. That could signal a large problem, even a big crash. So we must consider that this rally could be a bull trap. Already, I mentioned that we might see a double top around the June SQ. This new rally in domestic stocks might push the Nikkei to test its previous high from July 2024 around 41,000 yen. If that happens, June SQ could be the final peak of this rally. This rotation from global to domestic stocks could be a signal of the world economy slowing down. If both sides weaken, we could see a big drop after this final rise. Trump tariffs are a negative event for exports, and that's why money is flowing into domestic stocks. They seem safer for now, but once both sectors become expensive and it global slowdown signal appear, the whole market could fall hard. I believe today's rally is just a correction, not yet a full reflection of an economic downturn. The real slowdown might still be ahead. Going forward, we should watch EPS momentum and economic data. Today's Japan CPI was okay and inflation fears are easing. But if retail sales stay weak or corporate price stay high, that will after affect EPS. These will especially impact domestic stocks, so it's important to watch those numbers closely. Until now, the market was driven by policy events, but from now on, real fundamentals will start to matter more. This could actually be a healthy phase for the market. That's all for today. Thank you for listening, and see you again tomorrow.